You know, I don't know why it's stuck in my head. I gotta be honest, but I've had Bohemian Rhapsody stuck in my head for freaking like 6 hours today. Mama, just kill the man. What is up, everybody? I'm Trey. We freaking talk fast and don't skip class. I'm gonna preface by saying that I'm not a financial advisor or expert, so take what I say with a grain of salt. Let's get into the video, guys. We got some freaking new lights and stuff in here. I didn't want to buy them a pack or maybe spend more money than I wanted to, but these look pretty nice. Let me know what you think of the freaking the whatever this is. I have no idea, guys. We're gonna give you an update on Zero Simple AMC here for the day. We're gonna go over a couple different things, but first and foremost, it was a slight red day, down about 0.97%. And yesterday's video, I said I was kind of uncertain. I didn't really know which direction this would go, so I mapped out three sort of roadblocks in which I thought you could potentially see this follow, and it followed this one pretty closely. Right, this purple trend line, essentially a bounce out of a demand zone back up into what would be acting as a supply zone right here, and it's just kind of finding this range bound trading between these two marks as it is right now. So with that being said, I'm going to go over, what I could maybe see happen here the next couple of days. This is still forming a new trend. You have the beginning of one, but we do have to see how this ends up panning out. Nonetheless, we're going to go over the Ortex data, which gives you an idea of 85% of the exchange reported data. We're going to go over the options flow, which is actually a little more bullish than it was yesterday, which is a good sign to me. I like seeing that. It shows me that there was some big buyers stepping in, essentially saying I think it's going to be higher priced later in time than it is right now, and they're targeting some shorter expiration. So that'll be interesting. Go over the technical analysis and then get you on your way. So without further ado, baby, let's get into the video. So we're gonna start off here with the Ortex data. You see a slight change to the downside in terms of short interest, down about 2.39%. And this is a couple day trend now where you can actually see the short interest going down just a hair. Now I've been thinking to myself, right? Why do you see the short interest going down at the same time as the utilization taking a massive nosedive? Well, it doesn't really correlate with the stock price. Now, you're looking at the overall stock price. I'm sure it's covered positions. With Ortex, it's a T2 settlement system, meaning that any sort of shares that were returned happened 2 days ago. And you can see that back 2 days ago, you did have a little bit of a price action move to the upside, but that came off of an initial rejection. So, I mean, maybe you could see some of these shorts having gotten out right there. But what's probably the most interesting to me is this pretty drastic drop in the utilization rate. You see it go from 90.47 down to about 88.11%. And that doesn't really match up with the overall short interest that's actually on the stock. 96 million total shares. You got 108 million total shares on loan compared to 119 million the previous day. So you are seeing a slight decrease. I think this is actually somewhere where I'm a little bit fascinated. I'm not sure why you're seeing this overall drop. It could just be as simple as there was recalled shares that were previously out on loan, more so than they were actually shorted into the market, and they just pulled back, right? There could have been lenders that are pulling that stock back at the same time as having an overall larger supply of stock that's being lent out by big institutional investors. In the grand scheme of things, right, this doesn't really make a difference. But if this trend does continue, that is something to watch, right? That is going to affect, I would say at the very least, the timeline and what you can expect this stock to make the next big move. And it's just something to have to pay attention to, right? We have to take each individual data point and watch what's happening on a given day. But the moral of the story is, as per usual, when you look at this Ortex data, are there still shorts in the stock? And the answer is simply put, yes. 18.81% of the overall freaking free float, 500 million shares, is shorted. That's 96 million shares. Guys, to put this in perspective, this stock has been on a monster run for almost a year. I can't believe it's been that long. I feel like I've been doing this for 10 years, but it's been on a monster run for almost a year now. And they've had a lot of freaking time to kind of get a feel for what's happening here. Unless you live under a freaking boulder like Patrick Starr, you got to know what's happening with AMC and GameStop, right? And what's happening here with AMC and GameStop, there's been so many opportunities for these guys to get out of the stock. For this to even be 20% shorted based on 85% of the exchange reported data. And I quite frankly think it's much higher than that because of the heavy put options market, the deep in the money puts that can be played on this, essentially leveraging short positions, right? I think that it's just goofy. I don't know if I can understand and wrap my head around the thought process behind these guys that are betting against the stock and betting against the apes. But that's our competition. that's who you're up against, are guys who in the last 9 months couldn't find the trend, right? Always follow the trend. That's what they say, right? And the trend is not bearish. You just look at the grand scheme picture and look at what you've got accomplished, right? Last freaking 9 months, you went from $2 all the way up to $46.84, high of 72. There's more to come, right? Do this number. Maybe this means zoom out. Maybe you're playing with a harmonica. Not a harmonica. Maybe you're playing with an accordion. I don't know. But nonetheless, you get what I'm saying here. So that's what you got rocking on the short interest data. Nothing major has changed in the grand scheme of things. The flow. This is unusual whales. This is a tool that I use to be able to gauge what's happening with options, both calls and puts. I focus primarily on the ask side of things. That way I can get an idea of the long calls and long puts. Essentially, buy it to open, sell it to close positions. And if I show you the filter here really quick, I've got the $50,000 premium range set. I just want to see the big buyer stepping into this. You can see at the close, there was actually a decent amount of bullish activity that took place on this setup. The most spectacular probably is this $756,000 premium bet for a $70 strike on October 1st. That is a sense of urgency. I'm actually pretty damn impressed. I think impressed is the best way to put it. And you see the overall premium and the volume on this, and it's overwhelmingly bullish, right? You see 86% of this is call premium, and then 93% of this is call volume. The breakdown by strike, $50 is being pretty heavily targeted, 55, and then 70 as well. And then I want to show you the overall expirations. So let me just refresh this page here really quick. I'm going to pull up what is actually being targeted in terms of expirations. Typically with AMC, since it is such a heavily traded derivative within the derivatives market, you see that the weekly expirations are the most heavily traded. But I can show you this here right now. You won't have to even freaking bat an eye or think about it. Maybe. I'll pull up this one. We'll rock with this. AMC. There we go. So if we look at the most heavily targeted expiration point, what the Bob Saget, what is this doing? C. That's goofy. Well, I'll try again. I'll give this a second whirl. I don't know why my computer's being so goofy. Anytime I have OBS open, I think it's because I've got NVIDIA on here, it just acts kind of goofy sometimes. But the most heavily targeted expiration is actually October 15th. You see that there's 37 million total call options targeting that date, which does show a sense of urgency, right? It means that sometime within the next month, you are seeing some big buyers who are expecting a decent sized move. And then September 17th, as per usual, you see pretty heavily targeted. Now, what's the synopsis from this, right? What's the why? Why does it matter? Well, I like to see that there's a lot of freaking call premium and volume coming in. And I also like to see a sense of urgency because that does tell you that you can expect a decent sized move coming up sometime within the next, short period of time. Because obviously, $756,000 buyer at the $70 strike for October 1st is betting on that as well. So that's what you got rocking right here. Which brings me to the technical analysis, right? Now, what did I map out? 3 different possibilities. I thought you would either A, see this get a bounce directly out of the supply zone and come up to retest that 50 range. B, to get out of the supply zone or demand zone, come back up to the supply zone, reject, come back down, test, and then come up to the 50s. Or C, the worst case scenario, the bear scenario. And that doesn't mean that it's over, it's done, yada, yada, yada. This is just the bear case, right? For a bull, this isn't what you wanted to see today. The grand scheme of things doesn't matter. Not really. You were prepared for it. The bear case scenario was it would come down to this demand zone, test it, and then bounce back up. You can see where it rejected was this previous demand zone acting as a supply zone. So I'll change this color to red just to make this very easy to see. Bounced right here, rejected, came back up, rejected, and now it is just hanging above that demand zone. So what I would like to see now is since it did come up and test out this supply zone right here at about $47.88, it came back down and retested this demand zone. The best case scenario here, I'm going to lay out both of them for you, but I'm going to give you the best case first, is that it ends up bouncing back up into the supply zone, right? That's what I'm actually watching for here. So I'm going to map this out nice and simple. You want to see it come back up and break through that into this price action right here. Now, is that going to happen tomorrow? I can't guarantee you that, but I can tell you the overall trend is you are seeing this start to get some bounce, right? This is the beginning of a trend. We just want to see it start to form one. You've got the bottom of a touch point right here. You'd be looking for some sort of touch point right here, right? Following this overall uptrend back into that $50 range for the bull case scenario, if it's not going to pull back into any other sort of price action. The bear case, right? I'm going to give you both. Lay it to you straight. You can see here that there's another actual zone down here in which this actually briefly tested, which we're going to call demand zone, right? And that would be the bottom out of about $44.58. No bullshit ever, right? I'm getting you ready for both cases. If you see this break beneath, I would argue $45.85. You can expect a hard move to the downside to about $44.58 or so until this ends up getting some momentum back. That's the trend that you got to watch for overall. This is I would call some sort of head and shoulders pattern. You've got a head right here, shoulder. It could be the beginning of a shoulder. We have to wait and see how this trend plays out. But overall, the bulls are betting that this is a big move coming to the upside and not to the downside. So That's kind of what you got cooking up here. It's still in a little bit of washy territory, but this is slightly favoring bulls heading into tomorrow, which I do like to see. As always, though, I need to get this message out there. Please do not over leverage in this position. Please do not over leverage in any stock in the market. I don't want people not being able to feed themselves, especially playing derivatives, right? You have to be super, super ultra careful playing calls, especially weekly expirations. Have a game plan, right? That's all that I'm asking for. And guys, you know what this game is. I want to leave it at this. AMC is so simple, and I sometimes I get critiqued and criticized because I don't dig into the Reddit DD, and I don't come up with the latest, greatest, hot freaking news out there. And my reasoning for it is simple. I think everything that you need to know about AMC is out there. So what I want to do for you is give you the day-to-day sort of patterns and things that I'm seeing within the stock, so that you can go to bed maybe sleeping a little better at night, right? This is a simple freaking story and legacy that's being written. There's a lot of bad things that have happened in the stock market. AMC is a culmination of all those freaking bad things, right? It's essentially a slap in the freaking jaw by the apes to the hedge fucks out there that basically just bet against you, you know? It's that simple. Now, you can dig into the nitty-gritty sort of details and all that sort of stuff, and maybe I should, and I don't. But I really think this is something simple. It's about the freaking community, the people behind this, trying to stand up for something bigger than oneself. And that's kind of what I think about that. So that's what I've got for this video. Blah, blah, blah. You know the whole spiel. Drop a like, consider subscribing. Whatever you want to do, my friends. Catch you on the next one. Lights, apps, always much love and peace.